Broadcast is now starting. All attendees are in listen-only mode.
Well, welcome members and guests to attend our November Virtual Investment Club meeting. I am Jay Eagleson, president of the club. Well, let's start our disclaimer. We are a stock investment club. Our mission is to provide a supportive environment for all members to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon. The stocks we presented today are for education purpose only and are not intended to be a recommendation for buying or selling of any stocks. We ask you to do your own research. So guests, we muted you for now through our meeting, but we will open the mic towards the end of the meeting to ask if you have any questions or comments. During the meeting, if you have any questions, you can type it up. In the box, there's a chat box. As you can see that you can type questions if you like. So enjoy the meeting. So next on the meeting agenda is the treasurer's report. Roy, can you tell us how we do for our portfolio?
Yes, you want to send it to me?
Okay, I will make you a presenter.
Okay. What I did to make it go faster, I created some slides. So come on, there we go.
Okay.
So this was the activity since the last meeting. We bought 3 companies, High Crush Limited Partnership, Retail, and Public Storage. And then we had dividends came in, so I reinvested those. And you can see that there. So we use as our first accounting product Morningstar's portfolio. So this shows it. And what I did here, I have all the companies listed by purchase date. So in that order. So you can see that we should have $1,000 or more in these. And some that are in the 900s, they've actually lost a little money. So our purchases last year, actually through January, have done quite well, but not so much this year. But this is our performance as opposed to Morningstar's U.S. market index. So we're not doing too bad. What I will do is go to the actual portfolio manager, and this particular view shows the unrealized gains and losses by how well we've done or how much we're losing. And I did it, I think, by the percentages. You can see IPGP has done really great. And in a little over a year, we've got 180% gain. Like Skyworks, we bought in January, and it's up basically 41%. So any questions about these?
So Roy, just to be clear, the number at the bottom of the unrealized gain and loss since purchase is almost 25%, 24.38 for the whole portfolio.
That's our gain, yes.
Wow, that's really good.
Yeah, I wish mine was that good. And then what I did too is we also use my iClub accounting, and they have this is just the reports. They have a new thing they're looking at, and that's super sectors: sensitive, cyclical, defensive. This is the
Excuse me for a
sectors.
second, Roy. Could you please click the front current slide on the
Oh,
play
yeah.
button?
Sorry about that. So here's the normal when you see the sectors. You can see how it's broken down. There is the by industry and by company. And then these are the sectors not represented in our portfolio. And that's the treasurer's report.
Great, thank you. So we don't have education topic this month because we have several quarter reports are due today. So next thing on the agenda is stock studies. So Joanne and Bernard are leading for the stock study for this month. Can you tell us about why you present this industry and why choose CRI and SGC? Go ahead, Joanne.
I had to unmute myself. I just promoted Bernard as an organizer. Bernard, are you there?
Oh, goody.
Okay.
Yeah, thank you.
Hi,
I had a
Bernard.
hard time getting in.
Okay,
but I
okay,
did.
you're in. Welcome. Okay, so Bernard and I partnered, and we tried to look at companies that were on the list of sectors that aren't represented, and we're having trouble, finding something. So I think Jay had forwarded I can't remember if they were roundtables, but Bernard and I decided to pick SGC that was reviewed. There was a stock study done on I can't remember exactly. Bernard knows who conducted the study. So we based our initial stock study review on SGC and tried to find a direct competitor under the industry that SGC is in, and couldn't, so we expanded our search, and it's consumer cyclical, and we found CRI. So SGC is Superior Group Uniforms, which Bernard will be presenting, and CRI is Carter's Inc., which is a children's clothing company. Bernard, do you want to go first? Oh, he's muted. Okay, I will go first. Why don't I do the industry overview? And this was another issue that we had, and Hanny brought it up, saying that our two companies were actually in different industries. I think it was according to the annual reports that the companies had? But even in Value Line, they come up as under different industries. But we select our companies based on the better investing sectors, and which I believe is based on Morningstar definitions of the sectors. So these two companies actually fall under the apparel manufacturing sector, even though they are listed as different industries under, like, for example, Value Line has them, Carter's under apparel industry, and Superior Group Uniforms under, let's see, I think it's called industrial services. Make sure. Yeah, industrial services industry. So, so I will do, and actually, I think both of them actually fall more under an apparel industry, since the Superior Group actually manufactures uniforms. So the apparel industry has really come back this last quarter. I believe let's see, I want to make sure I get this right. They had better than expected second quarter financials, which was the main driver behind the price increases. But let's see, overall sales in clothing, accessories, stores rose 2.2%. And actually that was in July. In August, they rose 0.6%, and in September, 1.1%. So they are actually having an increase. And then, so some of the reasons why they're coming back, these retail stores, is that, let me see. One of the reasons is that the dollar is dropping. So there's people coming over from Europe and spending. So there's a weakened dollar. So there's more European and Asian consumers buying the internationally. And the decline in the U.S. dollar has made foreign tourists visiting the U.S. more apt to purchase clothing. And then companies have been doing aggressive discounts and promotions. I think that's typical for retail now. And then the various cost-cutting initiatives and investments in multi-channel retailing and keeping up with fast fashion. So that's kind of the overall retail industry or apparel manufacturing industry. And let's see. So Bernard, are you there? He's muted.
Yes, I'm here.
Would you like to?
I can talk a little bit, I think, about the Superior.
Okay.
I can't. This is Joanne. I can't see your screen. All I see is agenda.
Yeah, that's right. That's all that's up right now. Do you want me to bring up your?
Let me try it. I think
okay. Okay. I'm gonna make you the presenter now.
Okay. I hope I can.
Okay, you can do it. Okay.
You know what? Okay.
Let's
Let me try.
let Bernard try. So Bernard, do
Okay.
you see the screen that says accept?
Show my screen.
So press a button.
Go ahead. Yes,
there you
we
go.
can see it. Perfect.
Thank you.
So that's your first cut.
Okay. Yeah. And Superior Uniform Group.
Mm-hmm.
And by the way, it closed over $24 today. It's gone up quite. But okay. And I discuss why you consider it a high quality growth company. Now, a lot of this was written by a previous person. It's been in business since 1922, IPO in 1968, net sales 2012 of 12 million, rose to 252 million in fiscal year 16 for a 20% growth rate in the CAGR, whatever. Diluted EPS have increased from $25 in 2012 to $98 in fiscal year 2016 for a 40%.
I guess that's
compound annual growth.
Yeah, compound annual. So I have a question. Who was the person did a stock study that you leveraged the sum of information? Do you know?
Yes, I know.
Is that from the Better Investing first cut?
Yeah, I had it. And when I turned it in, it's John Redford.
So it's from the first cut that sent out through Better Investing, correct?
Yes.
Yeah, he.
Yes. Okay, got it. Okay, carry on. I don't know that person. I just want to know your source. That's all.
Well, some of this is mine and some of it's his. I had it
right.
separate.
I just want to know the source. Yeah. Okay.
But Joanne helped me separate it so it'd be mostly my stuff.
Okay.
I'm not sure how to navigate this screen. I tried to pull down.
Go to the right. Yeah. Okay.
Oh, you did it. I think it's just a little bit slow. There's lagging for some reason.
Okay.
Go up a little bit. You can just talk through it. We're not going to read it line by line.
Okay.
Yeah. Tell us about how the company makes money.
Let me get up where okay, how they make money. Let me talk. I'll just kind of ad lib it a little bit, and you guys can read it here too.
Right, we read it. Just tell us about the highlights.
They make a variety of uniforms. They make uniforms for a variety of companies, and also Haney wrote me that he wanted to know what is their main customer. Is it concentrated in one or two companies, or do they sell to a lot of companies? So I sent an email I went to their investment relations, and I asked them to please let me know who their main customers were, and if their sales were concentrated on just one or two customers. I had a lot of customers, and they never answered my email. It's not like, of course, sometimes I miss an email. I get over 160 a day, but I never saw an answer to that question. I tried to get an answer to Haney's question, but I couldn't.
So you did not find those questions, though, I mean, those customers in their either technology presentation or what do you call that, annual report?
No.
Okay.
I did find that there was one report I found that their customers include Jamba Juice, Airbnb, In-N-Out Burger. I may have to scroll down again.
Why Airbnb
they
needs
have,
to have a cost?
They have a lot of, they show a lot of customers on their website, but it was just not clear. You know, certain customers look like they wouldn't be buying that much from them, and maybe others would be. So I was just curious if they rely heavily on one or two customers, or their sales are spread out and they have a lot more diversification.
That's a really valid question. So Airbnb, why do they need a uniform for Airbnb? It's a online company. Is that the same Airbnb what I'm thinking of? Oh, the Airbnb. It's not the one. Do you know what I'm talking about? The Airbnb for, yeah. Why do they need a? You booking someone's house through Airbnb. Why do they need a Why do they need a uniform? I'm just curious.
That's a good question. I don't know. Unless when you stay at a house, I'm thinking of bread and breakfast where you might want to have a uniform when you serve the food. But at Airbnb, you're right. You're not
right. Individual. Yeah.
It's gonna. I don't know. I didn't. But they also have Coca-Cola, Herbalife, Nike, AT&T. This is what they list. Hulu, DirecTV, 18 major companies they list. Now here's another thing I did learn about this, that their main concentration is the medical field. And I think doctors, white things and scrubs.
Yes.
And I think that's a plus in that with the demographics that we have, the medical field should be growing, especially if we ever get healthcare like most countries do. So now that I got the projected rate of sales, 4.8%. This I did from the stock selection guide. I looked at where the sales were pointing. I moved the arrow up to make kind of almost a straight line. And I found also, though, that the growth rate for earnings, the growth curve is steeper and going up faster than the sales rate at this time. Give me 11% EPS growth rate. Again, I just moved the arrow up on the stock selection guide till it was nearly a straight line for EPS, and it was 11%.
Bernard,
can I interrupt for a second? Yeah.
Can you show us that on your SSG? Because I haven't seen that method of predicting future sales and earnings.
Yeah. I think the better investing.
Usually what we do is, well, usually I shouldn't say we. Usually what I do is do an assessment of a analyst predictions, and I also take into account the.
Sorry, I'm going to take over control for a second. I have the stock selection guide open. I'm going to show you Superior. Sorry, because Bernard, I don't see your better investing. Now you can just walk us through.
I can get it here.
Okay, it's on your screen, Bernard.
Okay.
Is it on my screen now?
Yeah, look at it. Yeah,
that's yours, I think. But anyhow, you see, this is what I moved this up till it's there. On this one, there's only one analyst. That's one of the beauties. We're getting there early. Here, and you'll see how when you point at it, or not for me, but when on my own computer, it will tell me the numbers.
Okay, just a second. So you do have the SSG app, Bernard. You have it. No, I'm asking a question. Do you have your stock selection guide up from the better investing website?
Okay, let me.
No, do you have that up? If you have up, I will.
I had it up. I got it up about an hour ago, And now it's
So you don't have, okay, just walk through the sales. Okay, the sales projecting
Well,
4.8.
Jay, I was
4.8.
asking him.
This is it right here. Can you see it?
Oh, switch it to his screen.
Okay, I am.
I have it up
Let me
if you
switch.
can see it. Oh, here it is. Yeah. Okay. Oh, damn. What the hell's that? See my
Sorry.
screen.
Click
Oh,
on the click on
okay.
the button, Bernard. There you go.
Okay. Now I'm on the back here, I think.
Go
Let's
to
see.
the-
Wait, no. Let me go.
Go to the front. Yeah.
Okay. Front. Oh, here it is. Okay. Now here, although this might be the one from Toolkit, it might work a little differently. But anyhow, what you do, I do is I grab the arrow out here and move it up. And then when you get it up, no, that's too high. It gives you, you're trying to extend. And here you see that the sales is not very high. And this one here is coming up like, I think, 2.4%. It's not a steep growth curve for the sales. If you see my
Bernard, when you did it the other day, it was at 4.65, I think. But see, and that I tried to tell you, but fortunately, the other people online have voiced the same concern. You can do it this way, but that's not using judgment. You're not figuring out what the percentage is. You're drawing a line, and that's telling you what the percentage is. That's kind of backwards. And as you can see, by trying to duplicate what you did the other day, you're coming out now at 2% or 2.7% instead of 4.65. So that your method here is troublesome to me.
Okay,
Well,
my question.
Yeah,
So
I guess the other way to say that, Roy, is that if you look at the sales growth, it's not a straight line. So you're gonna have some fluctuations on both sales and earnings, and it's just it's kind of an arbitrary way to forecast, is to extend that line.
Because it's not necessarily going to follow that. I mean, is that just based on last 3 quarters that you're drawing the line, Bernard?
no, I'm looking at the long history. If you look back, I'm going back like to 2007. I hope you can see my screen here.
yes, we can see.
But how's the line being drawn? You say you're moving that line.
Just grab the
Okay.
edge.
Well, my question is this. My question, in your first cut, you projected your sales growth as a 4.8.
Yes.
Why don't you just type a 4.8 and show us what does it look like? And I want to know, so you kind of explained a little bit of why you say 4.8, and can you also tell us about their future growth, where their future growth came from?
Here's the way I'm thinking. It's a little bit different than what you guys are thinking. I'm thinking that the past will probably be extended into the future. In most cases, something like that happens. So based on the past, I'm drawing a line, especially since I don't have any analysts to read. This one only has one analyst. And I banged around, looked a lot of places. I couldn't. It's hard to get a lot of information. Although I did go, let me show you one place I did go. I did go to Glassdoor.
So what does the value line say?
I had that. They say it's a 3. I don't remember all the details.
So value line gave 3. You gave 4.8.
Oh no, they say. I don't know what I should have read more. I guess you're right about what this value line projected, but I know they rated the stock overall a 3. I mean, 1, 2, 3, 4, 5. They rated a 3.
Okay, so
average performance.
Okay, I want to make sure I understand. I hear what you're saying.
Value line has the growth at 12%.
Oh.
So higher than historical. Historical is 9.
Oh, maybe that's historical. Is historical 12 on there?
Let me look the value line. Value line sales is
They have 1 year and 5 year, but they don't have the predicted.
sales 12% 5 year. Oh, annual
Yeah, I
rate.
think that's passed.
Right. I think, yeah. So that's interesting. Value
I
line
know.
has different.
I don't know how they get that, but
Do you have a value line?
I saw that report. I'm sorry, I
Okay.
didn't.
So that's, I know you.
I do not have value line, and I can't get it.
You do have it in your folder. I saw it. So sorry,
Okay.
I just want to sort it out because I don't want to get stuff. Feel like, oh, it was so like a back and forth, so messy. Everybody's talking. So normally we practice to share screen and get things all organized. I think Bernard, are you traveling, right?
Yeah, I'm in Dallas.
Yeah, you're traveling. So that's why I think there's some way to not really organize this very well. But anyway, back to that sales. You gave 4.8. Is that why do you give 4.8?
Because I was basing the 4.8 in sales on the growth rate that past sales have had.
Past sales is a 9.3.
Well, no, when you extend the line.
Oh, I got you. That's what you were talking about, extend the line.
I guess if I extended the line and ignored the last 3 quarters, I'd get a higher thing. But I guess I got overwhelmed by the last 3 quarters, which were almost flat. It's true that sometimes they have, as Haney pointed out, more growth than others. But the growth, it's not a real steep growth curve in sales. It really isn't.
So I want to say your line you give is a 4.8 in your first cut.
Yes, that's
Okay.
what I did.
So did you read anything about their future growth, where their future growth came from?
Well, I based the future growth on their past growth. I extended the past into the.
Did the company talk about their future growth, where the future growth will come from?
Well, yeah, they're big on. I saw that. Well, first of all, they have a lot of customers. They listed those 18 companies, and they listed that there is a strong demand for these. I read this. I don't know for sure if it was that company. For these doctors that want to wear these white coats and the labs that want to have the white coats and the uniforms that they make, there is a growth in that industry, and that's where a lot of their growth will come from, especially if we ever have healthcare like most countries.
Okay. So do you mind I take over to show the SSG in the BetterInvesting online tool?
Yeah, go ahead.
Okay, because I have it on. I want to show to the club. I want to make sure everybody agrees that number you give. So you projecting the historical growth is 9.3. You're projecting 4.8, half of that, and then you projecting earning per share is 11%.
Yes.
Based on your first cut, you said something about extended line. That's kind of you did it like a backwards way. You draw the line and then you come up a number. Is that what I hear? What you said?
What I did, I moved the line up into the future like I think it will be, and then it gives me numbers. The program gives me numbers when I do that. Yes, that's exactly what I did, Jay.
Okay, I see. So and then can you walk us through why do you give your high P 21?
Okay, well, naturally, what I had to do, I crossed out the outlier here. For high P's, 27 was sort of an outlier. Although,
what about 26? Because there's another one, 26.
Yeah, I could have done that one too, but I just did one. And I also I figured 21, I crossed that one out because that's different than the other low PEs. That was another outlier. You could I didn't do 26, but you could if you want to.
Well, because if you cross 26, 20, if you think 27 is an outlier, it's not really because there's another number, 26.
Yeah.
You know what I mean? Because you cannot say these two numbers are so close. So that's
Yeah.
why I'm asking you.
But the
Yeah.
I just figured the most extreme one and was 27, and I knocked that one out.
Okay, I see. So based on what you have here is on hold. Now I'm going to ask the club. Are you guys okay with Bernard's projection for future sales and earnings?
Hello.
Okay,
Well,
I want to show what value line says, okay?
Okay, to answer your question, I was
Yeah.
going to wait to see if others responded to your question. As I mentioned a few moments ago,
Yeah.
Bernard and I had a long talk about that because I don't agree with that procedure at all. And I'll show when I do my annual report what I did.
Okay. So this is the value line. Let's say use value line number. I cannot read this. This is not really like the usual one that.
Well, yeah, this is the small cap.
Oh, okay. Is that why that they don't have?
So it doesn't have a projection.
Oh, okay. Okay, got it. So it's a small company.
But there are other ways to get analyst projections, and
So
I can talk about that.
Okay, it's a small company, only 250 million. Okay, small company, but they have been long. They established 19 something very early on, I think.
22.
You wrote
1922.
1922 when IPO 1968. Okay, but still, it's a small company. So they did not. I kind of want to know their strategy. Are they going to acquire or? So my question is where those numbers came from. How do we support?
Well, I think if you look at the historical growth rate of 9.3%,
Okay.
and then you look at how the sales are changing, they're flattening out. So I think 4.8 is conservative. So I think what Bernard did is he went basically half of the historical growth rates at 4 and 11 are half.
But no, he didn't. He moved the line up, which gave him that number. It just is a coincidence that it was half.
Oh, okay. But I think I would be comfortable, with going half because
half of that. Okay.
Yeah. I ran an SSG to compare it with Bernard, and I used obviously different numbers, but my bottom line was the same. It was about the same upside down ratio. It was a hold. I just disagreed with the procedure.
Okay. So what sales? So the sales you gave is a 5 or 4.8? What did you give, Roy? Future sales.
I don't remember. It was too long ago. I'm not sure I saved.
Okay, I see.
But what I'm saying is it was a hold when I did it.
Okay. So looking at the pre-tax profit was like going negative. What's that? What does that mean? I'm wondering.
Oh, they're just subtracting 301.
Oh,
which is the expenses from 328, which is the projected sales.
Actually, look, the pre-tax profit actually is going up. I think we should use the 9 instead. Don't you think?
Well, do you think you're going to be moving this into the buy range? If not, I think we ought to move on to it.
The 7.1 is just the 5-year average. So.
Oh, okay. Okay, I see what you're saying. It was 8 before, right?
Yeah. So if you look at 2017, it looks like they might finish the year around 9%.
9, yes, and then 9 plus 8. Okay, got you.
But
got it.
I think that the 2013 is dragging the average down.
That's true.
2012.
Yeah. No, well, I think so is it 12, 13, 14, 15, 16? Is that 12 through 16 is where they're getting the average?
1, 2, 3, 4. Yeah, 13 to
17,
16, and then you can project for 2017 because we've done 3 quarters.
Yes.
Right. So if you say that we're going to finish at 9,
It's
in
about right. No,
2017.
yeah, yes, it's about right. It's about 7. Yeah.
Oh, it's about 9, I think. Well,
Yeah, you're right. 2013 is dragged down. Yeah, because only 5.6. That doesn't matter. I just want to see. Look, if you look, preferred procedure is quite low. Let's just say use 11. I'm okay. I just wish that there's some sort of research to support that number.
Jay, would you mind just going back to the to the forecast just for one
Okay.
second?
Sure.
How are the diluted shares outstanding? What's the pattern on diluted shares? They're
I would say pretty consistent.
pretty consistent. Okay.
Yes. Okay.
They're not buying back shares. It looks like they're getting more equity financing.
So, why do we have 11 instead of 16? Well, 1.
Well, the managers pay themselves with shares sometimes.
Uh-huh.
do we always use preferred?
Sometimes the numbers can be out of whack. So I want to have some reasoning, but I don't know. Reason why I chose 11 because that's Bernard's number. At this point, that's why I say I wish there's some research or something to support the sales projection.
Substantially higher than the preferred procedure.
Okay.
We need to justify for it.
Yeah, that's right. So how about we just say as same as sales, 5% maybe? Just say 5. I just want to see, as Roy already said, it's not going to be a buy anyway. I'm not trying to make a buy. I just want to make kind of sort of have some reasoning behind why do we do this. So.
Well, I looked up VICS, and they say their 3 to 5 year growth is 13.5.
Oh, okay. I'm interested in this company Uniform. Yeah, I think a healthcare, medical, and a lot of places. I just don't know. I have the same question as Henny's. I want to know who are their major, customers. So anyway.
Well, I listed 18 of them. They list 18, but I don't know like Haney's asking, is it like a 50% go to Coca-Cola or 12%
right.
go?
So yes.
Trying to find that out, I could not get it. They wouldn't.
Okay.
And I guess that really, if you were in business, you might not want to tell everybody where your profits are coming from.
So is the Superior Uniform Group is the biggest company to make uniform?
Not by far. No, there's 3 major ones, according to this report I read in Alpha. That in one company there specializes in firemen and police officers, but this one here, a Superior Uniform, specialized mainly in medical. And there's actually about 100 companies. But there's a lot of small companies like Superior. This is not the only one, but there's 3 main ones that have about over 50%, and then there's about 100 companies that have the rest. There's a lot of small uniform companies.
I see. Look at their payout. Does that consider do we consider these payout percentage are quite high?
Yes.
No, I don't think they're that high.
Okay, so if I cross out 26, 27, it gave to average 19. So I think 21 may be a bit high, I think.
I wouldn't take out the 26.
Okay. Will you take out 27?
No, I wouldn't take that out either, but
yeah.
Shouldn't change it that much.
Right. So
Doesn't
shouldn't change. No, it doesn't change that much. So what's the 52 weeks low? $16. Oh, right now it's there.
Near the high.
Right now is there at the 52 weeks low. Bottom. Wait, what?
High. You're high.
Oh, sorry. Yeah, right now. Oh, sorry. Yes. I read wrong. They're at the high. 52 weeks low is 16. Okay, I see. Okay.
Close at 24 today.
Yeah. Yeah. Oh well. So when you did a study, was it in a buy? The time you were studying? No, it was
No.
hold. Okay, it was hold. Okay then.
It was close. It's
It was
really
close.
close. Yes.
Okay. So okay, Joanne, let's talk about Carter then.
Okay.
I'll make you a presenter.
Okay. And actually, Bernard said he would put that on a watch list.
Okay.
Okay. So let's see.
You know, another thing, when he said medical, think about AI, think about artificial intelligence, a lot of things. Actually, medical, they are, because the new technologies, they're actually helping doctors to diagnose, pinpoint what went wrong. I don't know if the medical fields that's going to expanding as, you know, we think, because the, you know, and the artificial intelligence technology is getting mature.
But the demographics is people are aging, and there's more medical problems then. I don't know.
But
Okay.
they're using machine to diagnose you, not doctor anymore.
That is such a small percentage. It's going to be a while before AI
Is
affects the
yeah.
industry.
Next 10 to 15 years, I think.
Okay. All right. So I did my study on Carter's, and it's the largest branded marketer of apparel for babies and young children in the U.S. They are expanding internationally. I think they also, their next largest market is in Canada, and they have plans. They're expanding in China. So over the past 10 years, their annual sales was 9%, and their historical 5-year growth is 7.5%. So they've been dropping in their sales. And then for their EPS growth, last 5 years is 19.3%. And let's see. So how the company makes money is that they design, source, and market branded apparel for babies and young children. And they have brands like, if anybody has children, they'll probably be familiar with Carter's, Oshkosh. They also market for Target. There's brand names for Target. I think it's Just 1 Year, Precious First. They also have, I believe it's also Walmart that they have brands under the Walmart stores. Let's see. So they license a lot of their clothes under other brands internationally, and then they reach consumers in about 60 countries through their wholesale and licensing relationships, and then their website is expanding, and they reach about more than 100 countries through their website. So they're really capitalizing on. I think their target market right now is millennials, because those are, who's having the babies, and millennials are more apt to use the computer to make their purchases. So they're expanding more on their online, being able to sell online. So for the projected growth rate for sales, I chose 5%. And this is based on an estimated low from, so when I looked at Yahoo, it was 6%, Value Line was 9%, BI had 5.2%, and the company forecast itself had 6%, so I chose a conservative 5%. Their future growth is going to come from e-commerce sales, and they're expanding their distribution through Amazon, and they have a private label called Simple Joys under Amazon. And then 11% of their sales came from mostly Canada, but longer term, they're looking at targeting China. And a notable collaboration is with Alibaba, which is an Amazon-like portal and it's for the Chinese market. And then Carter sources materials through a very strong network through Asia. So they're able to cheaply source a lot of materials with short notice, so they're able to grow their brands very fast. So they also sell their license agreements to several retailers. So that's what's going to be driving their future revenue.
Actually, Joanne, if I could just add real quick. So Alibaba recently announced that they will be, that you can actually buy things off of their website right now. So they're trying to grow outside of China, in Europe and other Asian markets as well. So I think they're going to rival Amazon globally in the near future. So if they have
really?
Yeah.
Yes, I read about that too.
So it's not just the Chinese market.
No.
They're targeting international. Oh, that's interesting.
Yeah, they want
actually,
to grow internationally.
I bought things off Alibaba already. I was surprised at how quickly they fulfilled the orders. So
Okay.
They are cheap. However, Amazon is also in China as well.
that's right.
Yeah.
So we'll see
they are
them battle.
competitors.
Okay.
Right. Exactly.
Okay. So the projected growth rate for earnings, I selected 8%, and that's based on an estimated low from Yahoo, which had 11%. Value Line had 11%. BI had 8%, and their company forecast was 10. So I chose 8. That was BI was I guess that's Morningstar had the lowest percent. And actually, so and you can see above where it says EPS long-term estimate. That's the one I chose. And then the drivers for the earnings growth is they are going to improve their retail store productivity. They have a new brand that they just, this company was an independent company, and they are integrating and growing it. It's the Skip Hop brand, which is targeting millennials. They have, they're increasing their direct sourcing capabilities, strengthening inventory management, and they're returning to capital to shareholders through share repurchases. Okay, let's see. I'm going to go to the second page.
Just a second. Can you show us the? Yeah, there you go. Yeah, management. Okay.
Okay.
What happened to their debt? Was so high.
I believe that's from their purchase. They purchased that Skip Hop brand, and I have to look into that more.
Joanne,
sure.
when you get these different estimates from the different sources for sales or earnings, are they all the same time period, like
yes,
2 years out or 5 years out, or what have you?
Oh, no, I take that back.
No.
They're not. Some of them are. I think it's the sales. I'll have to look at it. Roy has this really nice chart where I can grab my numbers and fill them in. But some of them, I think it's like, I'm not sure if it's Zacks, or some of them only provide 1 year estimates.
Zacks and Yahoo are 1 year for sales, and I think all of the others are 5 years.
5 year, okay, yeah. So Yahoo's the one that it only has 1 year.
And then Value Line, it's 3 to 5. So take, throw your dart. And most of us say, well, we'll figure it at a 4 year, because they give a real squishy 3 to 5 year number.
And so when we do our estimates, it's supposed to be 5 year, or is it a range?
It's 5 years. The
5 years.
The SSG automatically projects out 5 years. So like in this one, you're in the third quarter, and the chart, at least in Toolkit, doesn't extend it. It looks like maybe the online tool does extend it, but it's 5 years out from this last quarter.
Okay.
So it could be 5. It's not 5 years from the annual. It's wherever, it could be the annual if that was the last quarter, but if it's like in this case, 3 quarters out, then it's 5 years out from this. So let's say October or November.
So these diamonds are the 5 year out, 5 year out.
Yeah,
5 year,
see,
okay,
you can see quarter 3,
okay, got it. So it's,
2022, quarter 3.
okay. Okay, so for my projected high PE, I struck out the 28.3% as an outlier and selected 23.1%, and I get a high stock price of 175.8. And then for selected low price, oh, let's go back for. So again, I struck out the 2013 $20 for the low PE. I used 16.6, 5.8, and got 86 for those forecasted low price.
What do you guys think that forecast the low price is higher than the 52 weeks low? Are you okay with that?
Do you want me to pick this?
Because it's like 10% higher. I don't know. What do you guys think?
What's the current price? I didn't.
104.
104.
Shoot, when I
So-
first looked at this stock, it was $97. Okay, so sorry.
So if it's at 104 and you're doing 86, you're saying that the downside is a 20% drop within the next 5 years, which is not an unreasonable guess.
Why don't you go ahead and see what, if you go to the lower price, what does that do? Okay, that drops it down to a hold. Yeah.
Well,
Yeah,
actually, it's 2.7, which is like it's almost 3.
But it's not a 3. So it's a, I'm pretty strong on cutoff at 3.
What's 3? What are you guys talking about?
Just
The upside down
ratio? Upside
Oh,
down.
okay.
But I'm okay with the calculation you used.
Plus I think because the holiday, the price will go up the next couple months, we hope.
Also, I remember Roy always look at the PEG ratio. What's the PEG ratio? It seems like it's close to 4.
Yeah, can you tell us about how to look at that PEG ratio and how to judge that?
Well, the theory has been, and the way it's been taught for a number of years now, is your high PE should not be more than 1.5 times your earnings growth rate. Okay. So let's say it was you had 20% growth rate, you shouldn't have a high PE more than 30. And back it down. The trouble is, so I forget what did you have? 11, Joanne? What was your growth rate?
8.
Oh, sorry.
8. Yeah. So using a 1.5 or 150% peg, that would be a 12.
12.
The thing is, where I've kind of gotten away from that is here everything is above 20. Well, 12 was ridiculously low. So, I'm in a transition. I like to stick to the 1.5 times, but it's unrealistic. I mean, even if they just go into automatic drive, they'll be beating that 12 left and right. So that I'm not sure that's a valid criteria anymore.
Well,
In
not
this
not
case.
not in this market because the
Yeah.
market is overvalued and all the PEs are artificially high.
Well, but you're talking about this market. If you look back all 5 years, it's higher than 20.
Yeah.
So
But
I
I
mean, if
thought-
it was just this past year, then I'd say, oh, it's strictly in the market, so let's cut it way back.
I thought the
Um,
PEG ratio would be computed not by the highest PE or the lowest PE, but by the average PE. Wouldn't that
Well,
be?
usually we always went down a few points below the average. We've kind of gotten away from that, but
And then the ratio, I think you have the ratio very right. Should be less than 2 times.
yeah,
I mean-
but even at that, that'd be 16. That's still way below any of the years that show up in the last 5 years. So anyway, that's the theory. Jane's right that it's the peg, and we've always used 1.5, but it just doesn't seem reasonable anymore.
Okay. All right.
Because interest rates are so low, there's no alternative. I mean, yeah, there's no alternative investment. Yeah, go ahead. I'm sorry.
Okay, so then what we get with, let's see. Sometimes this thing hides my, okay. The rate of return is 11.9% for the high PE and for the average high PE and 8.7. This stock has really, when I first started doing this study, it was $97. So it looked a lot better back then.
Yeah.
I hope you bought some.
No, I didn't. I was thinking Bernard's was going to be.
So since my daughter was born, I bought almost everything from Carter's.
Oh, you did?
Yes. So now she's 5, then I have to buy from Oshkosh. But the price, sometimes I learned there was no deal, and I just go to Costco. I noticed Costco offers better deal. But however, Costco does have Carter's brand as well sometimes. Oh, they do.
Yeah, I found that out because that's what my wife does now. Buys a lot of stuff at Costco, and it's all Carter. Or not all, but some of it is.
There's some of them Carter's, yes. And I actually felt that their quality is fine. When you mention Chinese market, it's very interesting. Jamboree actually is much more popular in China than Carter's. I think a Jamboree kind of like a little bit, not high end, a little bit better quality. Actually, it is. But I just find out as I study realty income, Jamboree bankrupted.
Yeah.
By where I live, there's an outlet. Jamboree and Carter's, they just cross street from each other. But Jamboree price is much higher. They sell stuff higher, the price more expensive than Carter's. But since now Celine doesn't wear Carter stuff anymore, yes, I just support that company a lot. I spent a lot of money on that company. The clothes, we bought almost everything from Carter's when she was baby.
Okay, is that it for Carter?
Yeah, they actually just wanted to tag on to what Jay was saying. So they have about 30% of the market share, Carter's does, for that baby category. And this is 6 times the market share of the next largest brand in that space. So they're dominating the market. But I just also want to go through the risks for this company. They source a lot of their material from Asia and Japan. So there's, depending on what goes on there, and they're exposed to currency and interest rate risks. They're because a lot of their materials are made out of cotton, they're exposed to fluctuations in the price of cotton. And like Jay was saying, there's a lot of other companies out there, and it's really highly competitive. One of the advantages that Carter's has is they've got a lock in on the sourcing of the materials, since they have such good relationships, but that's also a risk. And then just rising shipping costs could cut into their profitability. Oh, and then I wanted to answer Hanny's questions about their percent change in same-store sales year over year. The same-store sales are actually decreasing, but it's being offset by their e-commerce sales growth. So they actually have an increase in sales growth, but there's a decline in brick and mortar and a big increase in e-commerce. And then what was your other question?
I was just wondering of like where the growth is going to come from. And I guess if they're expanding into China and other countries, that's probably the source. But are they, Jay, you were saying you bought your daughter's clothes at Carter's. So are all these brands for different age groups? So Carter's is for one age group, Oshkosh for another, and so on, or do they overlap?
Not really overlapping. Carter's is tend to for baby until toddler, from newborn to 5T as like a toddler. After that, like Celine, she's tall girl, so I cannot find anything from her, so I have to go to Oshkosh for the young child session. They are not really age lapping. One's for baby, one's for
so they're they have a whole range, I guess, of clothing for young kids up to some age.
Yes, for Carter's, I will say from 0 to newborn to 4, maybe 3 or 4 years old, and then after that, the Oshkosh.
Haney, it's been now a couple of over 2.5 decades, but when we had Marina, we used a lot of Carter, and I thought the quality was fine, really good for infants. And the thing is, probably more than any other clothing company, they're made for infants where you need to change the clothes, not just the diapers, but the rest of the clothes 2 or 3 times a day. They're easy to unwrap and wrap back up, and it's great for, like Gia said, infants to toddler, and then you progress on. But I think they're unparalleled for infant.
Okay, for my closing, even though this is in the buy zone, with the return being, I guess the high forecast is 11%. I'm trying to get my. Who's eating?
So you're saying not 15 and above?
Yeah, I don't know if I'd recommend. I mean, I'd wait, maybe put it on a watch list till the price goes down.
I guess the Christmas is coming, and I don't think the price will go down. But
yeah,
not glad. I don't know what happened to Jamboree. Like my Chinese friends, Shanghai, they come to the States. They shop at the Jamboree because there's a store in Shanghai, the Jamboree, but not Carter's. So yeah, also I guess they're going to expand.
Okay.
In Asia, as you said, right?
Yeah. So should we look at the other stocks then? Let's see what we have.
Yeah.
Did you want the annual report first?
Yes. Oh, yes, the annual report. Let's do the annual report.
Fireworks.
Sorry, if we put it on a watch list, I guess the price that we would be waiting for would be around $90, based on your analysis, Joanne.
Yes. Let's see. What does it say?
Yeah. You know what? I doubt that it will.
You don't think it? What was it?
Unless the market is going to have a correction, but for companies itself, performance. So now they got rid of one competitor, Jamboree.
Yeah.
Right. And then so I think they probably will do well.
You don't think it's going to? Okay.
I don't think so, unless I think it's overall the economy or something went wrong, not the company itself.
Well, like, what were you saying, Hanny? It's kind of all the stock is oversold now, so maybe it's a certain point. It'll.
Yeah.
I mean, all the. Go ahead.
You kind of wait for bad news and then, and then you buy at that point.
Yeah.
Right.
Okay.
Yeah.
Oh, by the way, gang, are we recording this? I can't
Yes,
tell.
yes, we are.
Okay.
You know, so I don't know who else sell baby clothes. Who else?
Oh, Old Navy, Disney.
Oh yeah, that's right. Gap, all that.
Yeah,
Okay.
yeah,
Yes,
Yeah,
yes.
but I don't think they have infant stuff, do they?
Gerber. I don't know.
Gerber.
It's probably the specialty stores. Child's Place.
Okay.
I looked
Oh,
at.
okay.
Children's
Children's
place.
place. Children's
Yeah,
place.
yeah.
Yeah.
Okay.
Okay.
Okay. All right. So
Okay.
now,
All right.
do I send it over to Roy?
Yes, please.
Okay.
You want me to do it?
I
Oh,
got
you
it.
got it. Okay.
I don't
Skyworks,
see it.
annual
There we go.
report.
Okay. I just wanted to start out first because there was some, question about looking for information.
Hmm.
I start with Stock Central, and under this tool and analysis tab, there's a research link. You put in there, and so let's say, Skyworks. Well, first you get this, little graph that shows you how it's done, but you go down and earnings reports and analyst estimates. So you can click on Zacks, Yahoo. You can get the transcript from Seeking Alpha, Reuters estimates, Morningstar, and NASDAQ. So I have a spreadsheet that I write these down. I look at and click on these. Then I also look at Manifest, and Manifest gives a 5-year, whereas Zacks and Yahoo is 1 year out.
Is that free? Is that free, Roy?
Which the
Stock
the
Central.
Stock Central,
It's free?
that portion of it is a subscription, but that portion is free. You can click on that.
Okay.
You know, the one that Roy just showed, you can do the same thing in the Better Investing online too, just to let you
Okay,
know.
Okay.
Yeah, I'm
research.
talking. Okay.
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 So then I also look at value line, and on the normal value lines, they give you a 5-year estimate for both sales and earnings. I also see where they project the price out. Then what I do here, when I start my my study, I actually go up. That's not it. Sorry about that. This research, and you can let me just do this first, and this gives you the 5-year estimate or the historical growth. It gives you also the last quarter. Then you can do your creative study, and this, now you could delete some of these years to get that 5-year, but I start there because it's already pre-programmed. So so what I did is I come up with these and I figure out what my estimate's going to be based on all the various analysts I've looked at. And then you also have this 2-year analyst, which was 9.6, but based on some higher numbers from the others, and the fact that all three of the 10-year, the 5-year, and the quarter were higher, I went up a little bit from that analyst, but I didn't go to the this 20%. And then for earnings, I looked at most of the earnings were in the 14 to 15% range. And this analyst was 14, so I chose that. Preferred procedure was less, but I'm not all that clever with preferred procedure. So I usually project my own. So anyway, that's how I got these numbers. And then I deleted the 27 because I thought that was an outlier. Gave me the 20 high PE, 11 So I used the 20, and that gave me 208, which was a little less than double. And then on the forecast low, I used the low price. I made sure I had the trailing 12 months, which this being an annual report, that was easy. If you're doing a quarterly report, you'll probably have to adjust it. So anyway, mine comes into a hold. But let me see here. Yeah. So what a lot of companies are doing now for their annual report, they're just slapping a cover on the 10K. At least up through last year, Skyworks actually did a colorized annual report, but that takes longer. The 10K comes out first. So I expect sometime in the next 3 weeks or so to actually get the nice color annual report. And in that one, they put the letter to the shareholders from the president or CEO. This, because they don't have it yet, I didn't have that, but I used the management's discussion, and it read well. The other thing, one of the things I look at, and this calls for it, is to look at the auditor's report, and you want it to be unqualified without exception. If there's a qualification, that could be problematic. What I'm finding this past year, I don't see that word unqualified very often. So I have to dig deeper. And what KPMG was the auditing firm, they wrote a positive report. They said the consolidated financial statements are presented fairly, and they maintained effective internal control over financial reporting. Further on in the 10K, they talked about there was none when it came to disagreements with the accountants on accounting and financial disclosure. So this is as close to an unqualified report as I could come up with. They just don't use that term. And I don't know if they're getting away from that. I'm going to try to find that out, because now that puzzles me. But they did talk about, in their management discussion, competition and challenges. They believe that they can handle it well. They provide certain kind of discs and that are used in all sorts of products, not just Apple phones. And they also provide them for Samsung, but now they're going to this Chinese manufacturer, which is fairly new for them, as I understand. And then the Internet of Things, they're trying to expand. So a few years ago, they were like 90% relying on Apple. Now it's down to 60%. So they're broadening their base. I believe they can meet their expectations. Looking at certain things, their sales are up 11%. Inventory is up 17%, but their accounts receivable is only 10%. And I think what their inventory is up is just so that they can meet demands for the Apple 8, iPhone 8, and 10. But I didn't get that nailed down any more than that. Their assets way outweigh their liabilities by a 9-to-1 ratio. I've never seen a company with that huge a difference. I forgot to throw in the price, their cash. But anyway, their cash grew by 56%, I think it was 55 or 56%. And combining with their marketable securities, which are always low. In fact, sometimes you can't even find it. They were pretty clear about what they had. It's growing tremendously. They good increase, and their net cash provided by operating activities was pretty solid. There are other lines adding more cash, but this one is the first one that you look at, and it's a much cleaner way, I think, to look at net cash. This one has always puzzled me, the directors and diversity. It was interesting. Most companies now have tried to get a mixture of personnel, and here all I could find is one female director and one female vice president. All of them, including those two, are from the technology companies. Most of them from this company, or this company was a result of a merger a few years ago, and a lot of them came from both of those companies into the merger, into this Skyworks Solutions. But even the outside directors, they're all from other technology companies. So, and that doesn't trouble me. I think sometimes the diversity gets a little too much. The one thing I looked for and did not find was a banker. Most companies have at least a banker on the directorship. They didn't. But anyway, I think it's a solid report, a solid company. I just wish my numbers were higher and could recommend a buy. But I will keep my eye peeled for any opportunity in the future to buy it, but just not this month. So any questions?
No questions. That
Going once, twice sold.
Pretty good report, Roy. Very thorough.
Yes,
Thanks.
thank you, Roy. Okay, quarterly reports, we decided to go based on the action items first, and based on the reports you submitted, we all submitted. The first one is CVS. So action item meaning that the person recommend to sell or buy more. So the first one is, the first one is IPGP. Matt.
Hey there.
Hello there.
I'll just be brief because I gotta leave just a hair early. But yeah, I mean the price is high. I understand that, and the SSG doesn't work out. But they surprised to the upside most of the time this past year. They have high accounts receivable, as high as they did last quarter. So that's usually a good sign for sales and earnings next quarter. They also said they're going to invest in some CapEx to expand capacity, which will help their earnings, kind of going forward farther into the future. They're seeing a shift to these higher margin 6 kilowatt lasers. I think they have a much higher margin on those. I forget exactly what it is, but maybe something like 50 or 60%. And then they're big in China. They're like the industry leader for these types of lasers they cut, different materials, they engrave, and they do some welding with them too. So they use them in the auto industry and then the cell phones a lot, and the semiconductor as well, I think. But anyways, they have a lot of good things going for them. So I think we should buy them, but I understand, if you guys don't want to. So anyway, that's all I have to say.
Right. So reason I sent an email to, sorry, I'm showing the screen. I took over, Joanne, without letting you know. So actually I sent an email to Matt. In his report, he recommend to buy more IPGP, but I was looking at his SSG and it was a hold. So he had a question. He said, well, he understands that using SSG stock selection guide is to use when evaluating the purchase of a stock, but not the final decision, because we have been holding for a while, and the last 3 quarters, this company does very well, and then that was why he thinks that we should buy more. So I think, Matt, your question is,
Yeah, that's true.
Your decision is not really based on the SSG. You're based on the company's performance that we should buy more. Is that?
Yeah, I was more using the SSG as a guide, and then I don't know how to price in. I mean, they have pretty exponential growth going on right now. So.
Right. So I was reviewing his SSG. I brought a comment of, I'm okay with his projection, actually higher than the growth, historical growth. I think that was his based on company's guidance. Also, the confidence to where gaining from the last 3/4, actually, yeah, more than 3/4 year. We have a whole year and a half. This is our kind of a star stock. But my question for him is that, oh, look, your historical high P is 23, but you gave 27. So I was questioning that. So what do you guys think? Should the P align with the history?
It's still lower than like right now. I think it's like 35 or something like that.
34.
Well,
it's right now 34.
Yeah, but if you look at the history, even at the high, it's never been that high before, and I think it's a bubble. I mean, I own it, and I'm not selling any right now, although it's crossed my mind maybe I ought to cut back. But that 34 is so much higher than the history. I don't see how it can maintain that. Certainly 5 years out, it might for the next year. But the other thing is, for a quarterly report, typically, at least the clubs I belong to, use just the quarterly data. They want to look at it to see what the growth is and how it compares year over year, and also the other. And these are really high numbers. So, I mean, it's not just the sale price. Everything else, the fundamentals have been going up. So it is surprising that the upside down rate is so low, but it's like at the highest price ever. I mean, that's why we made so much money on it in our club's portfolio and in my own portfolio. It's not my highest. I actually have one higher. But I can't add to it because the return is just going to be so low.
Right.
So
anyway, that's my feeling on it.
Right.
Yeah. I guess will we ever buy this one though? Like we've said, it's been a hold for the last year, and it's just kind of it's doubled. So do we just estimate too low?
It's very similar to Amazon. So, I mean, and there was a good article in the Better Investing magazine a couple of issues ago about Amazon. It's growing like crazy, but when you do an SSG, it doesn't make any sense. It's got like a 200 PE or something.
Well, yeah, that's because there's most quarters or most months or quarters there's no earnings. Here, this one's got really good earnings.
Right, exactly. This is much more fundamental. Yeah, has strong fundamental, even though the return equity is down, but still average like 18%, and the debt is pretty low and manageable.
If your theory on purchasing stock, if you use momentum theory, this you could buy more. But using the fundamentals and the SSG, I mean, I like I said, I use the data, the quarterly data, to see how the company's doing. That's what we do for quarterly reports. Then, if we're going to buy or sell, I like to do a new SSG just to see what the numbers are. And you've done that, and it's what, a 1.3 to 1. I mean, it's not even close to a buy. So it
he was using 27 here.
Could keep going up, but
yeah,
all it's going to take is one bad quarter, and then it's going to fall back to the 20.
Can we look at the quarterly data on the third page?
Yes. Do you want to look at the graph, or do you want to look at the actual numbers?
It's the actual number.
Okay.
Yeah, I understand that you guys probably would. I mean, the SSG doesn't support it, but it's just, I thought we should bring it up at least because we said it was a hold for the last couple times. And
Yeah, I think we try to maximize our return. Yes, we can buy, but just, we want to get the return 15% or more. We want it.
We're holding it all the way to the bank.
But if you look at say earnings per share, the last 4 quarters, the percent change is like the lowest is 24, and the highest is 63.
Yes.
So they're generating earnings like mad.
Yeah.
We
bought it. Yeah. Go ahead, Jane.
The concern is that it's going well in the last 3 quarters, so people's expectations getting higher. So when people have a bad quarter, then they will be very disappointed, and the price will go down for sure.
I think the company's anticipating higher earnings too, because they're building new buildings and things like that.
45% is still not good enough for them because they are looking at 50 now. So even if they grow at 45 next quarter, they won't be happy.
Yeah. Okay.
So
we bought at the June 2016. I think that's when we bought it. I remember because I presented that stock 1 month old, our club.
What do they do?
Industrial
They
They make lasers.
Yeah.
Okay. So it's a hold for IPGP.
Look at 2014, for example.
Yeah.
And they were getting that kind of growth in earnings.
Yes, and then
at that time, and then it dropped.
2015.
And then yeah.
Right. I think in December 2015, it dropped, or it was March 2016. The drop was because the foreign currency exchange rate impact. It was not because company's performance. I can sort of remember that from their earnings.
Their sales growth is pretty impressive.
Yeah. Okay. All right. So people can make a motion if Matthew can make a motion if you want to buy it later. Next one is Next one is Facebook. Okay, Jane.
Yep.
Oh, I will bring the Facebook. Okay, you can go ahead and talk. I will bring the SSG up.
Yes.
Okay.
And just so you know, we've got like 3 minutes. I'm pretty sure we're going to go over this meeting.
I know. Sorry, guys.
That's okay.
Yeah. Okay.
Okay. Facebook. Last quarter, I looked at last quarter, and the SSG was a buy, but I was a bit concerned because the comment made by the management at the time, and I wasn't sure whether that was the best time to buy, and I was hoping to see some improvement in the earnings, and surely enough, this quarter their sales, their PTP, pre-tax profit, EPS, earnings per share, all went up. And also the comments made by the management, I really think they have a very long-term view in serving the clients. And even though they mention it very clearly, even though it may significantly impact their future near-term profitability, they still think they have to invest in technology, infrastructure, and security of their platform. So I think this company is a company with a high view, and they have a very high expectation for themselves, and they also put the best interest of their customers or clients in mind when they make decisions. So I think not only their earnings didn't sacrifice because of that, but then it seems that it's improving. So with the SSG, if you can look at the this quarter 3, can you see my screen now?
Oh, sorry, I did not give you the. Okay, I'll make you a presenter. Sorry.
Oh, sorry.
Okay, make you a presenter.
Yeah. Can you see my screen?
Yes.
Okay, so this is the 3rd quarter report, and you can see all have increased compared to last quarter. And then, so my thinking is that then that eased my concern a bit. So I went ahead and do a SSG. Sorry about that. So I went ahead and do a SSG. I don't know where they are now. I'm trying to look for it.
Do you want just to look at my screen?
Yeah.
Okay.
Oh,
Okay.
Here we are.
Okay, go ahead. Yeah.
So the estimate I used for the historical earnings per share was based on preferred procedure. So it's 31.7. And if you look at the growth rate, average growth rate for past years is 100%, 108. So I think this is pretty conservative. I mean, of course, we see a downtrend. It's trending down. However, with the price currently, if we look at the valuation currently, the PE ratio is 33.3, and that compared to average PE for this company, 50.7. That's way low. So valuation-wise, the relative value is only like 66%. And the upside and downside ratio is 8.6 based on a high price of 760. And the average high PE is, I use 55. The average PE, if I knock down the outliers, I get 56. So I use 55 for PE, average PE, high PE. And I also use 32 for the low PE. And if I knock down all the outliers, then I still get 31.7 for the average low PE. So I think based on conservative projection, we still get 8.6 to 1 ratio. And with the company, the quality of the company, and I know how as I just mentioned, it's a company with a high view, and they really are working hard. Last quarter, they emphasized on artificial intelligence and artificial reality and all those technology they are developing. So last quarter, I feel that there's a lot of uncertainty. If you look at the report on the right, there's a lot of uncertainty. Can you see? This is the last quarter. So I feel that possibly the R&D effort, because when Haney was asking me last quarter, I feel that R&D efforts may not play out, eventually, because or at least for the time frame that I'm looking at. But then I think this quarter has really improved the earnings, and then they also have revealed more about the management strategies. So I feel it's a company that we should consider buying.
So yeah, I did not own Facebook until I went to their annual meeting, and I really think Mark Zuckerberg impressed me, his management, and also how he tried to reach out to the community, how to want to build Facebook, for the future, like in AR and VR. So my question to your SSG using 55, even I think I know because they went IPO 2012, I think even just use 2016 the lowest PE, it will still give us a very nice return. And also, I will changing the low PE. You're using 32. I think it's fine, 32.
I can change it to let's see.
Oh, no, sorry. You should change the TTM using the. Can you click this yellow box as a menu update? Just click that yellow box. Yeah. So use the TTM, the 12 months trailing data. So we'll give you 5.39. And then that will give you 132, right? So, but then I think the low price is too high. Can you click the low price again? I probably was using 114, the 52 weeks low price.
114.
Yeah, the the 52 weeks low.
Oh yeah, okay. 114. So you want me to use
No,
this?
use the first bullet point, first radio button, first, yeah, that one.
You know, I'd like
114, yeah. Okay. Okay. So I think even use that still give us a buy and more than what was the potential appreciation, like 190. Can you make your screen bigger, Jane? Maximize your screen.
Yep.
So, you know, I'd like to show
24%.
something about.
Yeah.
21, 22%.
Yeah. Yeah.
I would like to show you something about Facebook if I can.
Okay.
Yeah, I agree. I think if we want to go really conservative, to go with the price, and I still think it's a good buy. And just because the management has been, very, very long term in their views, and I really think their earnings are picking up as well, even though it has been trending down. But then I think with the valuation now, it's worth, while to look at this company.
Someone said that Mark someday is going to run be the president, because he really go out to the community to understand their business, or people do all that. Or it's benefit for his own business, so he wants to build Facebook.
Yeah, I would like to show you something about Facebook if I can.
Okay. Bernard, just a second. So Jane, I think you're okay with these numbers?
Yeah, I'm okay with it. Even if I reach to 25, the lowest PE, still get higher than 5.7.
Right. Exactly. Yeah. Okay. Okay, I'm going to make Bernard a presenter.
Oh, thank you.
Okay,
so okay, my friends, look at here. Now you see here's where I am is at the glassdoor.com. It's a website. You go through the Glassdoor and you see different companies, but we'll look at Facebook. Here's I could show you what they do. They interview people that work in the company. Do you like the CEO? What do you think of this? What do you think of that? And it gives you an insight in the company that you might not get other places. Okay, I'm going to go. Come on, click.
Hit the enter.
What do I do?
Hit the enter.
Okay, that's what I'll do. Thank you. Thanks, Jay.
Sure.
Facebook. Okay, so here you have Facebook. We'll just do the overview, and you'll see that. Let me see if I can scroll down. It's kind of hard to. Let me see. Oops. Wait a minute. I'm trying to scroll down.
What's the size of that company? I can't remember. Let me. Wow, they already become. Oh, they are medium size. 27. Wait, 27. Whoa, they are a larger size company. 27 billion. Okay. Wow, they're growing fast.
Oh, damn.
Okay.
This here, they rate this company. It's rated the best place to work. And I think 2017, 2016, 2 or 3 years, Google been the best place to work, Facebook, but the rating for the employees, like Superior Uniform, they like the employees on average like the CEO 59%. At Facebook, the employees on average like Mark Zuckerberg about 92%. He gets the highest ratings as a CEO of any the companies I've looked at through this Glassdoor. And go ahead. I'm not navigating this very well to show you what I wanted to show you, but if you look, you can do it yourself sometime. Go to glassdoor.com and look at. Oh, here's go ahead.
Yeah, I think. Yeah, you have a very good point. But then I think we look at solid solid numbers, and also Facebook itself is the company itself. So of course, all the employees will try to put good comments about their company and their CEOs, right? So I think
they also interview past employees, and sometimes you get good and bad ratings, but I think overall Facebook gets a pretty damn good rating, and as I said, it's been voted like a 4.6 average reviews. I don't think it's manipulated. 98% approve of the CEO. 98%.
Yeah, I have read somewhere that their company, they don't have, it's like a mark, like executives, they don't have their own office. The entire office building is open. So they kind of like want to get closer with peers, employees, all rest employees. I actually reading, they are not CFO, Cheryl. What's Cheryl's last name?
Member.
I was reading her book, Option B. So we're talking about Facebook. So yeah, I kind of believe it probably is a good place to work, kind of like a Google. If we're going to make a motion, yes, I will agree to buy more Facebook. I will make a motion.
Yeah.
I know this isn't exactly numbers, but if the people work well, then it's a better chance for the numbers to be good.
Yeah.
Cheryl actually was a speaker at the Global Leadership Summit I went to just last week, and she would impress me. Yeah. So I think based on the solid numbers and based on my understanding of the management vision, I think it's something that we should consider.
Okay. Yeah. Okay.
I'm
going to make a motion.
You can take the screen back. Thanks, Jay.
Okay. I'm sure.
And we're 10 minutes over.
Yes, I'm let Henny to be the presenter. CVS. So Henny recommend CVS to sell. Go ahead, Henny. You are in control.
Muted. He's muted.
Oh, Henny, you are muted.
Oh, sorry. Okay. So CVS is actually a pretty solid company financially. However, their earnings have been going down quarter over quarter, and the pre-tax profit has also been going down. Sales have been going up, but there's two parts to CVS. There's the retail pharmacy business, and then there's the pharmacy benefit management, which is the they manage drug plans for large corporations, government, that type of thing. And the PBM business has been doing relatively well, but same store sales in the pharmacy have been decreasing on steadily over the last number of quarters. The other thing is Amazon is getting into the pharmacy business. They have now approval for 12 states to be able to distribute drugs online or what have you. And to counteract that, CVS is looking at acquiring Aetna, which is I think a large insurer. Aetna's market share, or not market share, sorry, their market value is about 60 billion. CVS is about 80 billion. So one of the attractive features of CVS is that they've been paying a steady dividend for the last maybe 10 years or so. But if you look at, if they acquire a company that's almost their size at 60 billion, they can do that one of two ways, one through debt or through a stock purchase, a stock swap. And in either case, that will negatively impact their earnings, and it will reduce their earnings per share. So I think they may turn this around, and they may do the Aetna acquisition, and it may work out in the long run. But in the short term, they have about 9 or 10,000 stores across the U.S. Those stores are not doing very well. That segment accounts for a large chunk of the profit. So I think going forward, I don't see this situation kind of turning around. Now, looking at how the stock has performed over the last year, it's dropped about 12% since the beginning of the year, negative 12%, and the S&P 500 is gone up about 18%. So relative to the market, there's a 30% difference. And again, I think they're large enough and they're smart enough that over the long term, they might be able to turn the situation around. But I think in the short term, they're going to continue to suffer. And this company reminds me a lot of Gilead. So Gilead was, the stock was going up. A lot of people were buying it. Then they started to run into trouble, and right now the the stock price is pretty much going sideways. It's gone up a bit, but it really hasn't regained what it was, doing in the past. So my recommendation would be to look for another purchase that will increase and give us a higher return in relative to CVS. So I would make a motion to sell CVS.
Okay. So I have a question on the mail order. It's based on your report, you are saying the mail order service gaining popularity, right?
Yes.
Could compete with Amazon. So I was following Realty Income. In their quarter earnings report, they state that back in 2010, they state that the number of mail order prescription has declined each year. So I don't know who's telling the truth, even though they just say they speaking in 2010, but they mentioned this in this quarter's earning transcript. I don't know who's telling the truth. So
well, my personal opinion on that is it doesn't matter, because if you look at the mail order business relative to the stores,
mm-hmm.
The stores represent a pretty significant, like over 50% of their revenue and profit. So if the stores are not doing well, even though the mail order is growing, if that is in fact true, you have to have a pretty significant jump in mail order to counteract the declining store sales. And one sort of potential long-term strategy that they have is they have these clinics, walk-in clinics called Minuteman clinics. If they start to transition their stores into clinics with pharmacies, that may increase foot traffic, because people will come in to see their doctor, they get a prescription at the same time. But right now they're relying on cosmetics, chips, whatever, candy, what they call front of the store sales, in addition to prescriptions. And that's not helping them very much.
Right. So the question I brought up is not really concern about CVS, it's concern of a Realty Income, because pharmacy, Walmart is their largest tenant, and so does drugstore. As that's why I was like, they said the mail order prescription declining, and that's why Walgreens doing so well. But kind of like a contradiction, what we learned, what we know about based on from CVS, that was my concern for Realty Income. That was why I kind of want to bring this
Sorry,
up.
I didn't make the connection. Sorry.
That's fine. No,
yeah.
I understand
what you're saying now.
Got it.
Yeah.
Okay.
Yeah.
All right. So the remaining reports, okay, thank you, Henny. So Henny's recommendation is to sell CVS, and the following reports, Fleet Corp and MIDD and PSA HCLP, they are recommendations to hold. So Tom actually is in the hospital getting an IV for antibiotics. I have a question of Fleet Corp. have you guys read about Tesla's going with the truck business?
Yes.
I have concern about the fleet FLT.
Eventually.
As far as Tesla's trucks, when do you expect them to hit the road?
2020.
Yeah, that they can't even get their new SUV out, or
Yeah,
I mean that new
The
Model 3 out.
Yeah. Yeah.
I like the president, but he says stuff that just he has yet to do anything. The company doesn't match what has said on any of the cars. I think the truck could be significant, but I think we're talking 20 years, maybe 15 years at the best. I just don't see that he's still having struggle with passenger cars.
I think he's a visionary, but I think you're right, Roy. Like execution has been lagging.
Yeah. Okay. So I just want to see, because last time when we do the stock study, Henny, we talk about electrical car for truck. I said no way if we not in the next 5 years, but suddenly the news come out that they are working on that. That's why I was like, oh, okay.
Well,
but
he's
anyway,
also working on this Hyperloop and SpaceX, and but it just takes there's a lot of inertia to get these things into mass production, and I think that's the issue.
Yeah. Okay. So do we have any, okay, thank you for that. Do we have any other questions on FLT, MIDD, PSA, O, and HCLP? They all recommendation is hold. So I brought up the realty income. I have a question about PSA and O. I felt that last month we bought both REITs stocks. I felt like I felt like a little bit irrational, like I was, we have money, let's just invest. So I'm actually created the 2 polls and just want to make a recommendation. Actually, just want to keep one of them if in our personal portfolio none of us have the stock, I recommend we just sell, because I feel like our time is so precious to follow stocks, and I feel like we have so many already. Do you guys feel that?
Yeah, I feel that too. Because let's say when we present 2 stocks in the same sector or industry, we should just consider buying one instead of 2.
For the best, right? So I created a poll, and I would like to do a poll. If can you launch? Oh, sorry. So I was thinking if none of us have the stock in our portfolio, so I would like to make a motion to sell.
Can we have a discussion? Can we have a discussion?
Yes.
Okay, I'm really interested in this, the REITs. So even if this isn't somebody doesn't have in their personal portfolio. I mean, I've learned a lot just in what I've studied in the last quarter. I don't know about Matt and Roy who did the initial study, but it's very different from our standard stock study assessments. And I think if we're going to expand our knowledge and understand other stocks, I would like to continue to pursue REITs.
Yeah, I agree with Joanne. We presented this. We didn't vote the first time. It came back up again. And yeah, it was unusual that we bought both, but both of them looked, really good. The market fluctuates, so PSA is down a little bit more than retail is, but the fact that I don't necessarily own either one doesn't mean that I won't in the future. But certainly, this club is to learn. And I mean, we wouldn't have, if we were a club investing money where we had to pay taxes and that, I'm not sure that we would have high crush either, because that's a PL company. So, we ventured into these things because there's so many months we did not buy. We had a lot of, theoretical cash, and it was an interesting area. And both, even though they're both REITs, they're in completely different types. So I'm going to vote against it.
Okay. If
we
I
vote,
right. I was just like you. I was I am still very interested in the REITs, but I just felt like, is that really necessary for us to have both? Can we just pick the best? That was why I thought, okay, if none of us have either PSA or O in our personal portfolio, why do we just not to waste our time to follow it?
Okay,
because I don't feel like it's wasting time because I've learned a lot.
They're both REITs, but it'd be like, say we bought Carter and Nordstrom. They're two different types of markets. So sometimes these industries are pretty broad brushed. So, and that's happens to be the way with these two.
And why can't we leave it up to the people that are studying it? I mean, I'm still interested in studying mine.
Studying which one?
PSA.
Okay.
Oh, do you have O? If you're not interested,
I don't have O. Yes, I have O, but I just felt like, do we really need to have two in one, REITs presentation? And I just feel like we want to vote just because we want to buy it just because they both would buy, and we couldn't make a strong.
No, I don't think that was the reason why we bought it. I think we bought it because, at least I voted for it because it's really broadening our understanding of the market. I know we've always shied away from REITs because nobody wanted it. It seemed too complex. It is complex, but the more you dig into it, it makes sense.
So what do you think, Hanny? You think it's okay to own both? Henny?
He might be muted.
Okay, so let's just make a motion one at a time then. Sorry, my daughter's back. Let me fix it. Let's make a motion. What's the first one? The first motion is Carter, CRI. And
that's a hold. Not a hold, that's a watch.
CR is watching. So yeah. Matt, before he left, he has an appointment at 7:30. He said that he would like to make a motion to buy CRI. Is there?
I'll second that. I know, Joanne, you were saying, put it on a watch, but
I think the price is too high.
I'm
what
sorry.
Do you mean
what?
Price is high?
CRI is Carter.
Yeah, didn't I say watch it till the price goes down?
Yeah,
it's either buy.
But
I know, but I think it's high.
Okay.
Because our return is going to be, what was it, below 12%.
11%. So okay, but Matt made a motion. Roy second. Why do we just vote on it?
Okay, just vote. Okay.
Go to your email and then click on the email I sent. Where is it? Okay, voting.
Did you just send it?
Yes, I sent it this afternoon.
We've got to put our address or email address in, huh?
Yes, yeah. So that way we will know who sent it, who didn't. Okay. Okay. And so, Joanne, you're going to cast, right?
I haven't. Hold on.
Okay. Joanne?
Oh, hold on a second.
Okay. You are the presenter.
Let's see, how do I get to that?
It's under stock study. Response, yeah. Joanne, me, Jane, Henny, Roy. So
Bernard, did he have the? Oh, I didn't
are you
see.
going to vote? But Tom is not here. Matt actually made a motion. So Matt made a motion, so Matt will be yes. So I guess really depends on Bernard's vote, right?
Yeah.
Bernard? He's not there. So okay, let's hold on to this.
Bernard's muted.
Bernard's muted. Yeah, let's wait for Bernard and hold on to this one. And what's next one? Next one is
there he is.
Bernard. Hey, could you cast your vote for we're voting on Carter?
Go to your email.
Yeah. Okay, go to your email and cast your vote. Stock voting ballot. Bernard?
Okay, I can't find it, but here's what I was, I go to my email, I don't see it there. But anyhow, I would vote yes to sell CBS, yes.
No. We are voting to buy Carter, CRI. What's your motion?
Would you like to buy Carter's? Or
no.
No. Okay.
No. Okay. So sorry, Joanne. The motion. Oh no, sorry, Roy. And the motion did not pass to buy Carter. So the next one is what? To buy IPGP. There's no motion. Okay. The motion to buy Facebook.
I moved to buy Facebook. Okay, I second
How
it.
much? How much? How much?
Do we have? How much do we have?
Well, we have 3,000, but I would say we should only buy 1,000.
Yeah, I agree.
Really? I was going to make a motion to buy 2,000 actually.
No, I think
why do you only want 1,000? Why do you only want 1,000, Roy and Jane?
I just think
we already have 1,000. We already own it.
Oh yeah. Okay. All right.
But we own it because I really have very strong feeling about this company. I thought the growth can be as well as like a Google.
Yeah, but I think it'll throw our portfolio out of balance.
Yes, and it will grow. However, as I mentioned in my the quality evaluation, the price stability and the earning predictability are not as good compared to other companies in the value line. So I think we should gradually buy in instead of putting in 2,000. So if we put 1,000 and we observe, monitor closely, and then see how it goes.
Okay.
We can buy in more when the price, go down even further. Yeah.
Okay. So all right. So the motion is to buy $1,000 of Facebook. Let's go to the email to vote again.
Oh, that doesn't work for me. Let me try again, but it doesn't. I don't ever get them.
The email?
Sorry, what?
Let's see. Oh, here it is. Let me try again to go.
Okay. All right.
Would be in my inbox. The ballot would be in my inbox. Oh, yeah. Okay. So
the motion. Okay. Three person voted. Roy has no vote. Roy, you need to vote.
I'm going through my emails. I got 40 emails.
You are a busy person.
Here it is. Voting ballot. 355. Fill out Google Forms. Okay, stock voting ballot. I'll click on that.
Okay, so the majority vote is already passed to buy $1,000 of Facebook at the next open market, next day, open market price. So, all right, and then what's next one? Next one is to sell CVS?
Yes.
Oh, okay, who's going to make a motion to sell CVS?
I'll make the motion. I sold mine about a week ago, so.
Oh, okay, I'm going to sell mine actually as a capital loss. Offset my gain for this year.
It's sad because that company was kind of nice. They stopped the cigarette sales and they were really trying to do health stuff, but the numbers aren't there. Yeah.
Yeah.
Jay, did you
Okay.
clear the?
Yes, I cleared it now. I just cleared it. Okay. Okay,
You did?
so, oh wait, anyone second the motion?
Yes, I will.
Oh, okay, so the motion is to sell CVS. Please go to
Yep.
your email, vote again. Okay. All right, you can refresh screen now.
Oh, wait a minute, let me try to do that. Well, it's 2 yeses in a row.
Okay,
Good job.
Bernard, you voted. Yes, everybody voted. Okay, we see the results. Okay, motion passed to sell
Okay,
CVS.
can we see the results? Oh, there it is.
Yes.
Okay.
So
Jay,
we sell
can you
CVS.
clear me
We
up?
buy $1,000 of Facebook.
Yeah, I remember CVS was a triple play as recommended.
Yes.
So I think we should be really careful. You know, we have to really use our judgment sometimes.
Right. Also, I'm really debating because we owned less than a year. Sometimes I would like to hold a little bit longer, but it has been what, 3 quarters? It's going.
Yeah, I held mine after oh shoot.
Was it the
when there was
Anthem?
fear, yeah, there was fear that Amazon was going to eat them up. Well,
Yeah.
I think that's in the future, but their fundamentals deteriorated too much for me.
Yeah.
So,
Yeah. Okay. Great.
Otherwise, I agree. Yeah.
Yeah.
You know, hold it longer. But
Yeah.
like I said, I dumped mine about a week ago.
Okay.
So.
Okay.
We should wind up. We're at 11:00. I mean, we're at.
Okay.
6
All right.
after.
So now we open our mic to our guests. The first, okay, I'm going to unmute you one by one. The first was Andrew. Andrew, hi. This is your second meeting. So what do you think our meeting? I know we kind of went over.
So I found it very interesting. I'm definitely starting to understand, I guess, the process a bit more. Again, being in the meeting for the second time. I really enjoy understanding the research that goes into understanding like just the industry within the stock, like where the stock is being invested. I'm currently actually working on a project at school where we've been assigned Dollarama as a company and we're valuing it. So we've been going along this project, and it's actually something we've been working on between the span of our first meeting with the investment club and now the second one. So things are starting to make a bit more sense, and I find it's actually, yeah, like I said, very interesting to see how the industry is analyzed and how that affects the research that is put into whether or not the stock should be invested or whatnot. So I found it very interesting for sure.
Great. So are you a college student, Andrew?
Yes, I'm at the University of Waterloo.
Oh, wow. So since this is your second meeting, consecutive meetings, are you interested in do a stock study for our January meeting? Because today is our last meeting for the year. Are you interested to do a stock study with one of our members, mostly Henny?
So when would this stock study like start taking place? Would this be like during the month of December or?
You can work with Henny on that. The meeting presentation is on January 15th. You will get the study ready by January 8th.
Okay, awesome. Yeah, no, for sure. I'd definitely be down to do that for sure.
Okay, so we will guide you. You're not alone. We just want you. The reason why I do that, if you're interested in joining us, this is the process we ask our guests to go through, observe our meetings and do a stock study and see if you like, this is what, you really get your hands dirty basically to see how stock study works.
For sure.
Okay, you okay with that?
Yes, that'd be awesome.
Okay, so is that Travis is also with you?
He was with me. Unfortunately, he had to head out real quick. He should be back soon.
Okay.
I can definitely see if he's
yeah,
well.
why don't you text me in the chat when he's back, okay, Andrew?
For sure.
Okay, thank you. Okay, next person is BC. BC. Hello, BC. Hi. You're unmuted. You can talk now. you register your name as a B and C.
Now they're muted.
Oh, unmuted. So he muted himself, self-muted. Okay, Brian. Hi, Brian. Brian? Brian Cohen. I don't know how to say his last name. Brian, your mic is open. You can let us know what you think our meeting. He's not talking. Okay, I will leave his mic open for now. And then Joyce. Hi, Joyce. Joyce? I don't know. I'm not sure.
Joyce?
Joyce Warner. Joyce actually emailed me and also contacted me through our Facebook, asking me how to register meeting. Hey, Joyce, your mic is open. Okay, I'm not sure if, I don't know what happened. Okay, Mina, you're the next in line. Hi, Mina from Canada.
Hi, how are you?
I'm good, fantastic. How are you? What do you think of our meeting?
Yeah, thanks again for inviting me a second time. I thought it was it's good to see it in action in terms of the quarterly reports too, to see how the portfolio is managed. I thought that was especially interesting, and then how you've all kind of seemed to compare it to your own personal holdings. So I thought that's it was nice to see the actual real world implications of how we're learning here. So no, I thought it was a great meeting. Thanks again for inviting me.
Sure. Mina, are you interested to do participating in stock study as well, and potentially joining us in the future? Would you like to do a stock study?
Yeah, that would be great.
Also, yeah, we'll be presenting for January meeting. Is that okay with you?
Let me just check accountants. One thing, my calendar very quickly.
Okay, January 8th. Oh, sorry, not January 15th is our meeting.
15th.
So, yeah.
Yep, that should be fine. Yep, I can do that.
Okay, great. So we will email you, contact you. Most likely, Henny is going to work with you guys, walk you guys through how to do stock studies, what to present, all that. So, but anyway, Thank you so much for your time, and apologize again. We went over our meeting, and we still try to our best to work on the time management thing. So yeah, right. So hopefully, well, you all have a good night. And we do have a survey if you like to fill out. For those who did not get a chance to speak, you may want to fill out the survey for us to let us know how we can do better. Well, have a good night. Thank you so much. Happy holiday. This is our really last meeting for the year.
Okay. Well, good night, everyone. Have a great holiday.
Good night.
Happy holidays. We'll see you in January.
Bye.
Bye. Bye.
Good night.
Good night.
Thank
Joyce. Oh, Joyce? Joyce? I guess I have to work with her. I'm not sure. I'm going to dismiss her. Okay, so yeah.